Hey guys, welcome to the Wealth Creation Ideas. This is Mo, and today we're going to talk about Upstart Holding Inc., ticker symbol UPST. The stock is currently traded at $23.82. The company is due for its second quarter earning release on August the 6th after markets are closed. In this video, we're going to quickly go over how the company has been performing financially, how the stock has been moving over last year or so, what to expect out of earnings call tomorrow, and what are the key things that you should be looking out for in terms of evaluating the stock after the earnings release. So let's quickly dive into it. Just a quick background. Upstart Holding Inc. is an artificial intelligence lending marketplace. The company's platform includes multiple lending products. It applies artificial intelligence models and cloud applications to process underwriting consumer credit. Quickly looking at the stock, the stock peaked in 2021 after the COVID at $380. And if you see after that, the rally has been fizzled out in last year and a half. The stock has been trading in a very narrow range around $20-30. There are a few times when it peaked out of this range, but broadly comes back to the same range. Now, why this happened? Let's look at the financial performance of the company. Here is the key driver. In 2021, if you see, the company almost increased its revenue by fourfold. The expectation was that this increase in the revenue is sustainable if the companies continue to grow at the same pace. But obviously that didn't happen. 2022, the revenue came down slightly, and after that, since then, the revenue has been climbing down with as low as 500 million for the year ended 2023. Let's look at the Upstart Holdings earning release for last quarter. As far as the broader operating metrics for the company is concerned, the company has been doing well. It's been constantly adding new customers. The originations are increasing. It's bringing more and more banks and financial institutions onto its platform. Remember, more banks are there, the company will be able to underwrite more credit for these banks. The problem really lies with couple of things that company is dealing with, and I'll quickly go over them with you guys. The first and the foremost thing is the analysts don't like the amount of loans that the company is carrying on the balance sheet. If you see, looking at Q1 2024, the company had $924 million dollars of loan on the books. They call some of these loans as testing and evaluation, which is basically testing their models. And rest of the loans are on the books because either they are not able to sell them or they don't want to sell them, right? Company did started doing a bit of a securitization wherein, reducing the overall risk related to these loans, but still, there's a billion one of loans on the books in 2020 for Q1. Just to give you guys a contrast, if you look at the earnings for this company back in the time, they only had 260, $140 million loans back in 2020, 2021, right? So there's a significant increase, which, obviously analysts are not a big fan of. The second thing which I will be looking out is the revenue from the fees. The company gave a guidance of 135 million. My expectation is that either the company is going to be at this guidance or slightly up. But it's going to be very interesting to see if company revises its guidance for rest of the year 2024 and what the guidance will be for Q3 2024, right? So again, a number to very closely watch on. And then the another number to watch out will be the net interest income or loss. This is mainly related to the fair valuation adjustment and the credit event that company recognizes losses on for the loans on the books. So I will be interested in seeing how this number evolves given the light of recent increase in the unemployment rate and overall change in the macroeconomic factors, right? So again, looking at the guidance for the revenue is going to be a big factor in terms of how the stock is going to behave after the earnings. So something to look out for. The last thing to look out for is the operating margin or change or management of the expenses. Last quarter's earning calls company talked a lot about cutting off expenses, cost reduction to get profitability sooner. So it's going to be interesting to see how some of those initiatives are working and what management has to say about it. All in all, it's going to be an interesting stock movement after the earnings call. If the company is able to meet the targets or beat the targets marginally and increase the revenue guidance for the rest of the year, we can see a positive surprise in the stock. And if the company ends up missing on the revenue or revising the guidance downward, we could potentially see a negative surprise, which has been the case in last few earnings call where where the stock has taken a beating after the earnings. So it's going to be interesting to see how the stock performs after the earnings. I will be posting another video tomorrow after the earnings are released for Upstart Holding Inc. to analyze the performance of the company. Leave your comments in the comment section if you have any feedback or you want to hear something more about the company. I will be posting more videos and another ticker symbols in the coming days. Please like and subscribe the channel if you have not done it already. Till goodbye, till next video.